In America today, millions of people wake up every morning believing they are doing everything right. They go to work, pay their bills, try to save a little, and slowly build what they hope will become a stable life. Yet something strange keeps happening. No matter how hard they work, their money seems to disappear faster every year. Their savings stay small, their stress grows larger, and their credit card balance quietly climbs higher month after month. What most people do not realize is that this is not just bad luck or poor discipline. Behind the scenes, a powerful financial system has been carefully designed to keep ordinary people trapped in long cycles of debt. And one of the most powerful tools in that system is sitting quietly inside almost every wallet in America: the credit card. Credit cards were originally introduced as a tool of convenience. They promised freedom, flexibility, and security. Instead of carrying cash, people could make purchases instantly and pay later. For many Americans, this sounded like progress. And at first, it worked exactly that way. People used credit occasionally, paid the balance at the end of the month, and moved on with their lives. But over time, something changed. Interest rates quietly increased. Credit limits expanded. Marketing became more aggressive. Today, the average American household carries thousands of dollars in credit card debt. And what begins as a small purchase often turns into a long financial burden that follows people for years. A dinner out, a new phone, or a simple emergency expense can slowly grow into a balance that feels almost impossible to escape. The real story begins when we look at how credit card companies actually make their money. These companies do not earn their biggest profits from people who pay their balances every month. Their most valuable customers are the ones who cannot pay everything back immediately. Every month that a balance remains unpaid, interest begins to grow. And the interest rates are not small. Many credit cards charge rates that can reach 20% or even higher. That means a purchase that originally cost $1,000 can slowly turn into $1,500 or even $2,000 over time. Minimum payments create the illusion of control. A person may feel responsible for making the required payment each month, but these small payments often barely touch the original balance. Instead, most of the payment quietly disappears into interest, keeping the debt alive for years. Imagine a middle-class family living in a typical American suburb. The parents both work full-time. They pay their mortgage, support their children, and try to manage rising living costs. One month, the car breaks down unexpectedly. The repair costs $2,000. Instead of draining their emergency savings, they decide to place the expense on a credit card. The minimum payment feels manageable, maybe $40 or $50 a month. At first, it seems like a simple solution, but over time, interest begins to grow. Life continues to bring new expenses: school supplies, medical bills, holidays, groceries that cost more every year. Slowly, the balance climbs higher: $5,000, $8,000, $10,000. The family is not reckless. They are not irresponsible. They are simply navigating a financial system where debt grows faster than income. The moment of realization comes when people begin to understand that the system was never built to help them escape debt quickly. Credit cards are designed to feel helpful and easy to use, but their long-term structure quietly benefits the lenders far more than the users. The longer a balance exists, the more money the system generates. Late fees, interest payments, and penalty rates all become part of a steady stream of profit. For the individual, debt feels like stress. For the financial system, debt is revenue. This realization can feel uncomfortable, but it is also empowering, because once people see how the system truly works, they can begin making decisions that protect their future instead of feeding the cycle. Understanding the credit card system does not mean abandoning credit entirely. Credit can still be useful when used with discipline and awareness. But the real lesson is about control. Every swipe of a card represents future time and effort that will be required to repay that purchase. When people shift their thinking from short-term convenience to long-term financial freedom, everything begins to change. Paying balances quickly, limiting unnecessary spending, and building strong emergency savings can slowly weaken the debt cycle. The goal is not simply to avoid debt, but to understand the rules of the financial game being played. The truth is that financial freedom rarely comes from working harder alone. It often begins with understanding the invisible systems shaping our everyday decisions. Credit cards are just one piece of a much larger financial puzzle that affects millions of families across the country. When we start asking deeper questions about how money flows through these systems, we gain the power to make smarter choices for our future. If you want to continue learning about the hidden forces shaping modern money, make sure to subscribe, share this video with someone who needs to see it, and join us in the next documentary where we uncovered another financial system hiding in plain sight.